Hi, good evening all, and thank you so much for joining today's exclusive webinar. My name is Ashish Asthana, your digital evangelist. And as per your demand and the request that we have been received from all our investors, that during this season we wanted somebody from the industry. So here we have Mr. Abhishek Singhal, who is a head products with Aditya Birla Sun Life Mutual Fund AMC, and from the research side we have Mr. Ajay Garg, who is a senior fund manager with Aditya Birla AMC. Sir, we welcome you both on our show.
Thank you.
So today, our investors are waiting to know at present, because there was so much of volatility in the market. What is the outcome of the market? How does the equity market looks like? And and again, it's this time wherein we are looking out for saving tax, and what can be the best avenues? Shall they enter into ELSS? Still some of for some of our investors, ELSS still sounds like a jargon. So I will definitely hand over to you so that you can take it from further from here, and please give some sort of insightful knowledge to our investors.
Sure. Thank you, Ashish. Welcome, listeners. ELSS is nothing but an equity-linked savings scheme. And over the last many years, this category of mutual funds, it's basically an equity fund, but it's a fund which allows you to not only invest, save money, but also save tax. While there are other means of saving tax available, like a PPF, PF, an FD or a home loan. This is one investment which has a short lock-in period, only 3 years, and it has given multiple returns. So if you look at the past track record of this category, and in fact the fund in this category are Aditya Birla Sun Life Tax Relief 96, which is the oldest fund in its category. The 5-year return on an average, on a compounded average growth rate basis, for since inception period of 22 years plus is a little over 20% per annum. Over the last 3 years, it's done about 18.5, 19 odd percent sort of return. But given that markets can be unpredictable over the last few months, few quarters, they've been volatile. Should you be investing? Of course, you should be investing, because the wealth is always created when you invest at the right time, when markets are low. And it is often said that never let a crisis go waste. This is just the right time to invest, and who better to understand why is it the right time to invest than our own senior fund manager Ajay, who's been managing this Aditya Birla Sun Life Tax Relief 96. Ajay, if you can just share with us your outlook on the market and why this is such a good time to invest.
So thanks, Abhishek, for taking up the introduction of the fund and the company. While investing in equities, I would say there are a couple of points one should keep in mind. And the primary one is like what are the valuation and what is the opportunity ahead. So what we have seen last 1.5 years, the price market has gone through a price correction and also a time correction. And not only the low quality companies that have corrected meaningfully, but also a good quality set of companies, they have undergone a price correction as well as time correction, and their earnings have grown, but at the same time price of the stocks have come down, which means that valuations have become attractive. And we have done some exercise which suggested that the large caps have come to 17 multiple, and mid caps are quoting at 15 multiple, and small caps are quoting at 13 multiple. Some time back, during the euphoric time, that was 2 years back, we saw small cap valuations being north of large cap valuations. Right. So that thing is now done, and there has been a meaningful price and time correction. And especially with the GST and DeMon, these mega reforms being behind, things look decent enough for equity investor. And bad news, I would say, is there in the price, and things can be quite good from here on. And as Abhishek highlighted, last 5 years, the product has given around 18% CAGR return, and Nifty has given around 11% CAGR return, whereas the broad market NSE 500 has given around a 13% return. I would say when someone is investing in equity, he should have at least 3 years in mind, and especially for ELSs, he should have a 5-year time horizon in mind.
Right.
And my calculation or judgment tells me, as an investor, one can expect similar returns in the future.
Right.
Yeah.
So that's really great. I mean to say it is very important to know what sort of allocation, I mean to say, you have been assigned into it, considering the such kind of volatility in the nature, and still the CAGR have been always more than 15%. As you're saying, it's 18%. That's phenomenal something, because at the end of the day, equities are not for short term, or especially when you do your investments or wealth creation, that's not for short term. You do not check your portfolio immediately the next day or other. You should always have a long term horizon, and that you have already having a proven track record on that. So any specific view on how the scheme have been performing, and if you can throw like what kind of a sector allocation you have done in this scheme?
So Ashish, so I manage Tax Relief 96, our flagship fund,
Right.
Birla Sun Life Tax Relief 96. Right. Another one is Birla Sun Life MNC fund, and both while managing both the funds, the thought process is almost the same.
Okay.
So I'm the person who looks after. Or the investor profile of these two funds is they prefer low volatility.
Right.
And ELSS, our experience tells us that ELSS many times it is the first fund the person or any investor invests in equity is
Right.
through our ELSS product.
Right. That's
and
right.
That experience, if his experience in ELSS category is good, then he's
open to do further
to sectoral
investment.
or other forms of equity mutual funds.
Right.
So over here, what we focus on is like low volatile, high on return, risk adjusted return,
Right.
performance.
Correct.
And while choosing companies, we look at are there decent level moats. There's a parentage, quality of the company, and lot many things.
Fundamental analysis.
We
That's
look after. Yeah. So once we have all that, then the volatility, what we see like post investment, the volatility parameters of the fund are lower than the industry, and the risk, basically the risk profile is lower and the return profile is higher.
Right, with the low beta, you
Yeah,
can say in
yeah,
simple words.
yeah.
Right, great. Fantastic, sir. Okay, so now I'm sure that viewers would like to know how you can place this order on the scheme and where you can find the details. So now I will share my computer screen so that you can actually see where you can find these exclusive schemes, because I'm getting a lot of questions from investors which scheme I should invest in. So this is a part of our research reckoner. See, we strongly, there are multiple schemes are available in the market, but we at HDFC Securities ensure that the best are available for our investors. So our research team reviews that, and on the basis of that, we have put across the schemes. Again, that has been need-based analysis have been done. So I will quickly share my computer screen. Over to my computer screen now. Right. So in this way, you can see this is our empowered logged in portal. Once you enter your login credentials from our website, right, you click on login, enter the login credential. This is how the portal opens up. And let me tell you here, you can also do it from mobile applications. Similar interfaces there on our mobile application as well, right? So you can do it on the go and you can get benefited. So here you need to keep your cursor on mutual funds. One-time investment, if you're looking for one time, even you can do SIP as well. So this is a need-based analysis what we have done. Are you looking for high risk, high return, or you're looking for good returns, low risk, or you want to park money for short term, or simply at this point of time, as you see that it's a year ending, what we say that the new year have just begun, but I would say the financial year is about to end. And this is a time in order, even if your companies have been not accepting the receipts, still you can go ahead and you can make the investments and you can claim that tax exemption from while returning your file, right? So during the income tax return file, you can do that, correct? So here you need to click on tax saving schemes, and you would be able to see these schemes available. So here we are talking about Aditya Birla Sun Life Tax Relief Fund. You can see the snapshot of the scheme out here. The current NAV is 29.86, And here you can see the 3 years return is 16.3% and the 5 years returns are 18.42. See, 5 years is the time wherein the scheme have seen the best and the worst time. Even if the CAGR of 5 years is 18%, that's amazing. You can simply look into it, right? And even if you see the AUM, that means asset under management. This is the kind of amount which Mr. Ajay Garg is handling at present of various investors, which is amounting 7,373 crores. Right, so that's a huge amount, a huge responsibility Mr. Garg is handling at present, and very efficiently. So in order to invest, you simply have to click on invest now. A quick panel will open. Again, we have made it very user friendly, no multiple options. Simply you have to enter the amount, how much your ATC bracket is there. In fact, I would not say only for tax saving. This can be also a good investment which is giving you a handsome return for a wealth creation if you are looking out for a least lock-in, right? Because this is the product within the category having the least lock-in of just 3 years, right? And then you can click on place order and confirm, and your order would be successfully placed. Then you can go to order book. Once it is executed, you can take the tax receipt and you can submit at the time of return filing, right? So that's how simple and easy it is with HDFC Securities, and the similar interface is available on our mobile trading app as well. Now viewers, we are open for Q&A. If you have any specific questions, please ask. We all will be happy to answer. Thank you. So let's see what questions we are getting. Okay, so first question we are getting, Mr. Garg, that can I do an SIP into ELSS scheme?
Ashish, you can do a SIP for sure, but there is also a weekly option. So I prefer a weekly option. You can do it every Monday.
Okay.
And instead of choosing a date, you can also choose a day.
Oh, okay. All right. So that can also be done. But then in that scenario, I guess since this ELSs are having lock-in, so each SIP, that investment they are having, they will be having a lock-in of 3 years. Okay. So viewers, you can definitely do that, but every installment that you will be making will have a lock-in of 3 years. So let's see what next question we are getting.
I'll just quickly add on to that particular point. Sure. SIP, one would ask that, while there is a 3-year lock-in, and if it is applicable on every single transaction of SIP, why should you do an SIP and not a lump sum investment?
Right.
It's pertinent to point out that both the methods are applicable. People who have missed out on their tax saving for the year, they should look at doing a lump sum right now before 31st of March, last minute rush. But investors who are looking to opportunistically also take advantage of market cycles, markets will keep going up, markets will keep coming down. SIP is actually the best way to invest for long term. The portfolio will take care of whether markets are up or markets are down, because it's buying into very high quality companies, strong managements, less on risk, low beta.
Right.
And that's why probably an SIP from a retail or an HNI standpoint makes so much more sense. You can choose the day of the month that you want for an SIP. You want it to be the one day after every expiry, you can do that. You want it to be the first day of the month when your salary comes in, or the 7th of the month, that 7th date of the month, you can do that. So SIP also is a very flexible way of investing.
Right.
So depending on when you have cash or when you keep getting cash, you can choose your mode of investing.
Great. So the next question we are getting from Mr. Saurav Gope, he's asking, what if I withdraw the amount before 3 years? So I guess there is no possibility only. You cannot withdraw the amount, right?
So as per the ATC, Section ATC of Income Tax Act, this is actually the shortest lock-in amongst all tax saving options, and hence there is a 3-year compulsory lock-in. The only way one can potentially exit or withdraw before a 3-year period is if the tax benefit is reversed, and unless there is a an exigency, something like a hospitalization or an incorrect investment, if it might have happened or something.
Right. Okay, so next question we are getting from Mr. Ram Sundar. He is asking, is it possible to transfer SIP of ELSS fund to any other ELSS fund? So I guess that will definitely not be possible unless it is the same fund house. But then again, I guess that would be possible once the lock-in is over.
Yeah.
So once the lock-in is over, then it becomes again like an open-ended. From there, you can do a STP, which is systematic transfer plan. Very well, you can do that, but it will be within the same fund house. So sir, do we have any other tax, or one more tax scheme? Do we have, or at present we have only one?
Currently, the regulations permit for only one scheme per category,
Right.
and hence in the ELSS category, we have only one scheme available, which is Aditya Birla Sun Life Tax Relief 96.
Tax relief 96. So in case if you want to do transfer to a different fund, you can do in a different any equity or a debt or a liquid fund, but you cannot do in same because same company cannot have two LSS schemes running as Mr. Singhal have just informed. But yes, you can do it in any other scheme. Right. Let's see the next question. This has been asked by Mr. Swapnil Pense. He's asking how much tax examination will get by ELSS fund.
So it depends on
Which tax bracket they are,
yeah, tax bracket you are into.
and
So-
also how much your available limit is there in ATC.
Yeah, right.
So as per the category, you can save up to 46,540 rupees, I think, in if you invest the entire ATC bracket, which is 1.5 lakh in the ELSS category. Thanks to this government, the last budget that came out, for investors who are up to 5 lakh rupees of tax bracket, there is actually no repercussions of tax, but investors who are slightly higher than that will end up saving far more tax if they were to invest in ELSS. So it's a category, it's a fund where anybody who is wanting to save tax should definitely be investing in. From our existing investor base, I can also tell you that we have SIPs of rupee 1 lakh or higher also per month. So there are investors who actually look at ELSS category to make more money rather than only save tax. So because there is a lock-in, because the persistency is higher, the fund manager is actually able to make more profits than the other open-ended schemes. And that is what the track record of ELSS as a category also shows compared to the other schemes.
Other schemes. That's right. Fantastic. So let's see. Any other questions, viewers? Please ask. You have to simply click on question mark icon on your screen, and then the writing pad will open. From there, you can post the question. So I'm getting a next question wherein is asking, I have missed out the earlier session. Can I watch it again? Is the recording available? Definitely, see, this recording would be available, after a couple of hours on the same link itself. So you can, log on to this link after a couple of hours, and you can watch the recording again. This recording from the start will be available, and after some point of time, maybe within a couple of days time, we will upload this on our YouTube channel as well. So you can go to YouTube, type in HDFC Securities. This is how our channel would be displayed. You simply need to subscribe to it and press the bell icon so that you never miss any video update. And on that, you need to go to playlist. And under playlist, you will see our various TV interviews, research related, videos. And here we have webinars. So you click on webinars. And here you can see more than 150 webinars are available out here, 159 to be more precise at present, on various different topics, right? So you can see these webinars in your leisure time and you can very well upgrade your knowledge levels. So any further questions, investors, please ask. Considering the time constraint, we'll be able to take a couple of more questions. Okay, so this question we are getting from Mr. Abhay Singh is asking how many SIPs are preferred from wealth creation perspective, considering we have a 5 long-term goal, for example, 5 years long-term goal, for example.
So from a goal planning perspective, you could potentially have 5 SIPs, one for each goal. If the required amount of money is large, you can split each goal into maybe 2 different funds also. So you can have up to 10 SIPs. If you have more SIPs, it is also advisable that you spread them over different dates as well. So you get a much better spread in terms of volatility of market, in terms of rupee cost averaging. But the fact is that more and more funds of the same category that you add, it only duplicates. So you can potentially have, if there are 5 goals, you can have maybe about 5 to maximum 10 maybe SIPs, and it will serve your purpose.
Right. So this was really very interesting question asked. Let me also show you with this to all our investors that we have a specific section out here of personal finance. If you click here, you can see all your various financial goals. So we have pension calculator, we have child's education, you want to plan child's marriage or wealth builder. These are various different, financial goals available. Basis that you can fill up these details as your goal would be, and you simply enter your, relevant details which has been asked out here. How much you have already saved, how much you can save monthly, how much you can increase annually, and select your risk appetite from here, whether you are having aggressive approach, moderate or conservative, again depending upon your that goal that you are doing. And once you submit it, this is a robo advisory model which will tell you which schemes are there, and accordingly you can set up an SIP. It will also consider the inflation, the average inflation which is running out, so that you get the correct view. So for example, if this is the case, I'll just take it. Say for example, I'm 30 years old and I'm planning to retire. It's not mandatory I should plan to retire at 58. I may plan to retire at maybe say 52, right? At present, how much you have saved for it? If there is any corpus you have saved, you can simply enter that. How much you can save for this purpose every month? I can definitely save 10,000, for example, and every year our income increases. So it is very important that it should directly proportionate to our investment as well. So I'm just putting it out here as 10% increment, and I am quite aggressive. I will have an aggressive approach, and I'll simply click on submit. Right here, it will give me what would be the corpus. So this kind of a corpus can be created easily possible if now it is asking, will this be enough for proceed? So definitely this is sufficient for me. I'll click on proceed. Immediately the schemes have been displayed. Of various different schemes are displayed depending upon your interest area. You can select and you can start a site. Right. And I'm also getting many questions. We do not have account with HDFC Securities Demat account, but we want to do investments in ELSS. How can we do? So definitely you can do that because see, in any case, if you have your family members or your spouse or your brother, sister, they are working, definitely they would be liable for tax implication. So we have launched Digify. You can see out here, I have done an, exclusive webinar on Digify. It is available on our YouTube channel. So Digify is a purely paperless mutual fund account. So in this, no need to open Demat account. And the beauty is that no account opening charges, no annual maintenance charges, not even mandatory to have HDFC bank account. So you can have any other bank account which is providing net banking facility. You can link it to Digify. You open the account, ensure that the customer is KRA KYC verified, and they can simply open the account within a couple of seconds and start investment within 10 minutes. You can open the account, link the bank account, and start the investment and save tax. So still time have not gone till 31st March. We have time. If you have any of your friends, colleagues who wants to do it, they can open our free account Digify. Right. So this will be the last question for the day, which we are taking. This has been asked by Mr. Kumar Swami. Is asking ELSS investment, which head of tax it has to be mentioned in the tax form, and under which what about the returns that I will get after 3 years of lock-in, whether they will be taxable or not.
In terms of where do you mention it in your ITR, it comes under other income. Or rather, it comes under capital gains.
Capital gains.
And the fact is that ATC, all the investments will get clubbed together, and you get the benefit against all your other heads of income, which could be salary, which could be other income, which could be capital gains as well, or capital losses as well. The other question was what?
I would like to add one more thing, that the government has, though LPCG is taxable now, but it is exempt to the extent of 1 lakh rupees.
Right. So of course, so up till 1 lakh rupees are anyways. The next question was, what about the returns? So returns which you get in that financial year, if your overall returns are less than 1 lakh, you don't have to pay any tax. It's completely tax free. If your annual returns in that financial year is more than 1 lakh, then only on the additional amount, the 10% taxation would be applied.
Sure. Right. So an additional point is that this investment is an EET.
Right.
So you get an exemption on the amount that you invest. Your the profits that the fund is making are taxable because it's a public trust.
Right.
At the time of redemption or whatever dividends that you get, that are tax free in your hands, you're not paying any taxes.
Right.
And at the time of redemption, it's eligible for LTCG because it's already covered more than 1 year. Up to 1 lakh rupee of capital gain, it's anyways exempt of tax. Only above 1 lakh rupee, it will be subject to LTCG.
Great. So that's all for now, viewers. Thank you so much for joining in. Thank you so much, Mr. Ajay and Mr. Abhishek, for joining us and giving such an in-depth knowledge about the current market scenario and how they can, one can start their investment, immediately. Because for what we believe that for savings and investment, sooner the better. Thank you so much for joining in, and I wish you all have a great evening ahead.
Good evening.